Alright guys, so welcome back to my channel. In this one we're going to be talking about the daily bias. It's one of the most important things, especially when it comes to intraday trading. Obviously with me, for example, I execute on the 5 minute time frame, and usually with my elite strategy I try to go for them 1 to 3 to 1 to 6s. As an average, obviously I have published all my results and everything. So what is it? A 3.69 risk to reward per trade, average 81% win rate, and obviously this is been back tested with a load of data, so you can kind of see all the results in the free Discord if you want to see that down below. But anyways, how do I actually discover the daily bias for every single day that I'm getting into the trading, and then what tools do I use? So for me personally, whenever it comes to the daily bias, I start off with a few things. Now, first of all, this is how I discover the bias for any type of time frame. Fundamentals has to be first. So when it comes to fundamentals, there are a few things that you have to understand. For me personally, I'd basically bring this down to a few things. So let's put fundamentals as the main header. Obviously, it's got to be spelt right, but forget it. When it comes to fundamentals, there are a few things that you have to look at. So the first one is obviously your interest rates. These are quite possibly one of the most important things. Secondly, inflation data. So this will come down to, for example, CPI, PPI, and then a few others as well, but these are the main sort of the ones. And then you've got GDP data, and then under that as well, I would say you've got employment too, employment data. So these aren't in any particular order. Obviously, these things can change from time to time. When it comes to interest rates, for example, these would be when the sort of major banks actually meet. So one example would be FOMC for US dollar. Just to give a little insight, obviously, those of you that are still just getting into trading, you probably would have heard FOMC, you probably would have heard of CPI data, NFP data as well for employment. These are the main things that I need you to basically understand. Now, how does this actually help with the daily bias? This won't help in specifically trying to see where price is going to move for that day. However, if you've got an understanding of where, fundamentals is actually taking it long term, then usually we try to align on that direction. However, there are still days, for example, where you might be pulling back, or for example, we had a tiny bit of news that took it the other way. Still, I would say long term, this is always very, very good to understand. And in some of my more complex sort of mentorships and everything, I obviously do explain the fundamentals in detail. But anyways, fundamentals, these are the four main things that you want to go through. Now, when it comes to the daily bias, this is what I would comprise it as. So let's get the same type of thing again. When it comes to the daily bias, this is usually what I actually tend to look at. So in the beginning of the week, before I even start the week, I look at the weekly candles. Weekly candles. So what do I mean by this? I'm going to get into a lot of detail with every single one. But when it comes to the weekly candles, essentially what you want to do is something like this. Let me not delete that one. You would go on the weekly time frame over here, as you can see. Now, just as a few examples, what you usually tend to look for is, was the previous week a candle where it was actually explosive in a certain direction? Or for example, was it one where there were a lot of wicks and it's quite indecisive? When you've got these indecisive candles around areas where you could potentially reject off, so you always have to look at supply and demand zones. As an example over here, for example, when we were looking at this pullback to this kind of area, what I would have been looking for is, okay, we had a very explosive move into there. We look at the weekly candle. All right, we're over here. Potentially, we might see a slow start to the week of the previous week and then eventually a push downwards. At some point from these weeks onwards, we would only be looking for the previous week to show us sell candles. So that's the type of thing. You have to mark it out on the higher time frame just to see, okay, what potentially could we get? In times, for example, where we've got a massive rejection of one side of the market and it completely closes in the other direction, usually we can expect for price to actually move in the opposite direction, as you can see over here. Once that candle closes bullish, the next week will most likely close bullish as well. As an example, when it starts to flip to the other side, we have a very indecisive candle over here. The next weekly candle is most likely going to be a reversal candle. So this type of thing, when we're looking at the weekly time frame, how does it fit into our daily bias? Well, understand this. When we look back at our daily bias, let's just go back onto all of the annotations that we had going on. When we start to look at the daily bias, how does this actually help? We obviously have weekly time frames, so sort of weekly setups. Usually what you tend to see is in the beginning of the week, you start to see sort of a fake move in a certain direction. You then get some kind of expansion throughout the week, and then at the end of the week, you most likely will get some kind of retracement. Now, usually what this will actually look like is something like this. So say, for example, we've had a wick up there, and then we've also had a little retracement wick at the bottom as well. Now, again, when we do expect for price to move in a certain direction, understand this, your retracement will likely come in the beginning of the week, and then later on in the week, we'll get that expansion if we are going to stick to the trend and move very aggressively. However, if you expect some kind of consolidation, whether it's because of data, whether it's because of price action showing you, you know, we've had a few candles, let's just see. Let's just have a look, for example, over here. Any scenarios that I could actually pick out. So as an example over here, you see this one over here? We've had a very nice sort of pin bar. I believe that's what the candlestick is called. The next week, I would have expected for price to actually continue to the upside. However, it didn't. It just started to consolidate throughout the week. So for the next week, I would expect me to take a different approach. I wouldn't expect it to be explosive. However, it obviously did move to the upside. The next week was quite slow, and then eventually it was explosive. But either way, what I'm trying to say is here, you won't always be able to tell the daily bias from the weekly candle. However, it helps quite a lot in being able to set some kind of frame of what we can expect. Now, the second thing, once we actually have this in line, in terms of the daily bias, I would actually take it down to the next step. Now, we've obviously looked at our weekly candles. The next part is looking at the 4-hour chart in terms of direction. Now, why would I look at the 4-hour chart? For me personally, I do believe that the daily bias, let's just make it very clear. The weekly candles would identify the trend. The 4-hour chart would identify the trend as well. And also, I would give some priority to fundamentals, given an insight of what the trend will actually be. Once we get these three in line, so fundamentals, weekly candles, 4-hour chart, you kind of understand where the trend is actually moving. All we're going to be waiting for now, for the daily bias, is where are we in terms of our supply and demand areas. So, what pullback are we at? And then where are we in terms of our supply and demand areas? So the reason I say that is this. Say, for example, this one over here on the 4-hour time frame, as you can see, or even on the 1-hour time frame, we've now pulled back all the way up to this point. As you can see, the higher time frame, the trend is showing that we're actually moving bearish. Now, in terms of what I can expect for the daily bias, potentially for the next day and the next few days, I would majorly be looking for sells if we get some sort of confirmation to the downside. So what I mean by that is this. What we then would move down to, so I would say these are the higher time frame. So this would be to identify trends, higher time frame, daily bias. Let's move to the next area, which is going to be the lower time frame, understanding to get to the daily bias. So again, obviously, like I said, the daily bias, if you are a complete beginner, this is possibly going to be one of the most difficult things that you actually are going to master. So there are a few things in line that you really do have to look at. So obviously, I would say these are the high time frame ones that we do look at. Now, when it comes to the lower time frame ones, what can we actually start to look at? So here, for example, I would definitely say intraday. Intraday, and then obviously we're looking at the lower time frame over here. Now, what do we actually look at? So in one of the previous videos, I've actually talked about the liquidity theorems on the intraday time frame. Now, what this actually means is we look at previous sessions. So essentially, it's going to be something like this. Usually, I would define this as, first things first, look at the 30-minute. This also could be the 1 hour, it could be the 30-minute. I personally do find the 30-minute to be quite helpful. So I look at the 30-minute trend. Now, what do I mean by the 30-minute trend? Let's just take a little look at this example over here. So in the past few days, even in the past few sort of week or so, what we've actually seen on a 30-minute time frame is we've been moving quite bullish. So generally, when the market opens, I'm definitely going to be looking for a sweep below some kind of sell side liquidity or some kind of low, eventually pushing us up to the upside. Why? Because the 30-minute has been showing me this actual trend. So again, these higher time frame confirmations are going to show you where you're going to be moving to in the long term. But when it comes to the lower time frames, you're definitely going to have to take it down a notch and then look, where are we actually moving towards. Now remember, the higher time frame takes more priority over the lower time frame. So what do I mean by that? We have been buying up for quite a long time. What's that? The 19th of April, and at the moment it is the 15th. So for about a month, we have simply just been buying up Euro USD. Now it's come to a point where we are now at a nice little pullback on the higher time frame. So this is where I can expect price to slow down. However, in the past month, all we've been looking at is consistent buys, and that has basically been it. So that's going to be the next part, the 30-minute trend. So that's what you're going to be referring to. Now, when it comes to the next part, it's going to be all about the intraday liquidity theorem. Now, when it comes to this, definitely join up to the free Discord. In there, I have got the free course. This is completely from start to finish, 7 modules over 7 days, and you'll have complete access to it. I do talk about everything in extreme detail. And then when it comes to free PDFs as well, I'm always sending out a lot of stuff in there. And by the way, even when it comes to the free Discord, I'm sending out a bunch of public analysis all the time. So for example, we've been expecting EURUSD to continue to the upside, and that's exactly what's happened. Now we're at this point of interest, we can start to look for price to actually slow down. And again, I'm always keeping consistent on here. Everything completely for free. So yeah, if you do want to take the upgrades to learn the elite strategy and all that, obviously that is an option, and you will have that option over there. The sale on right now is actually a bargain. I'm not going to keep it on for too long. But yeah, intraday liquidity theorem, that's definitely what I'd look at. So when I really break this down, usually what you're going to be looking for is sweeps above or below lows and highs. Okay, cool. So that is basically going to be it for the lower time frame daily bias. Now, why do we... and then one last thing. And I've actually made a YouTube video on this as well, so definitely search that up. Honestly, the amount of value I'm giving here. The quarterly theory. So when it comes to the quarterly theory, it's quite basic to understand, not too complicated at all. Every single time frame is split up into 4 quarters. So for example, throughout the year, you've got 4 quarters. You've got Q1, 2, 3, and 4. Even when it comes to the lower time frame as well, the day is split like that. You've got Asia form as Q1. Q2 is going to be London, Q3 is going to be New York, and then Q4 is going to be the end of New York at the end of the day, where it's quite quiet. And usually these types of setups will come as something like this. You've got Q1, which is quiet, Q2, which is some kind of manipulation, Q3, which is an expansion, and then Q4, which is some kind of consolidation again. Again, there are variations on this. Please do look at that video. It's one of the most sort of highest viewed recently ones, sort of videos that I've done recently. But yeah, that's going to be it. So with everything that you have in mind over here, trust me when I tell you, once you master all this type of stuff, you're actually going to be understanding the daily bias. Now, when it comes to how I actually apply this, now when it comes to my premium Discord, I obviously do send in all my live analysis and all that kind of stuff. But this is the way that we usually do it. We have a few areas. So when it comes to all of this, we've got this. Obviously, there are the elite backtest, the fundamentals to look at the higher time frame, and then we start off with the weekly analysis. The weekly analysis is, like I've said, the 4-hour chart. As I've said over here, I'm expecting for price to continue upwards. Now, usually, like I said, we expect some kind of low of the week before we get a push upwards. But in this case, it decided to just push upwards completely, which is completely fine because we're still looking in that direction. Then we look at our pre-entry point of interest. As I've said, we usually mark this up on the 30-minute or so, and then obviously take a little snapshot of what we want it to look like. So area has been marked up. What can we actually expect now? Some sweep of the lows. And as you can see over here, for price to continue upwards. Once we get these confirmations, that is actually where we can start to look for our entries. So as you can see over here, for example, our entry was monitored over here and sent out. And then at that point, it started to push. To the downside, and that's exactly what we love to see. So like I've said, if you are interested in all this type of thing, Take a look at the elite strategy sort of down below, everything like that. Apart from that, make sure you are joined in the free Discord. A lot is going on in there. But yeah, guys, that is going to be it. So when it comes down to really breaking down the daily bias, this is the type of thing that I look for. Once you apply all of these kind of things, I think you're going to be in good hands. But yeah, guys, that's going to be it from me. Take care, and I'll see you all in the next one.